Matt, welcome to the podcast. Thanks for making the time to join us today.
Thanks for having me, Jeff.
Yeah, I'm excited to talk about this. You guys have some experience in fintech partnerships and also software, which was an interesting part of the conversation when we first caught up. So I kind of wanted you to go through a little bit of that story of things you've built in the bank and spun out, because it's such a different story. We hear a lot about build versus buy, and a lot of people on the buy or partner side. And the idea of building stuff that not only was useful for you, but useful externally was just such a departure from what I'm used to. I really would love to hear kind of the more full version of that story.
Sure. So Leader Bank, being a 20-year-old bank, we've always been very technology driven, always looking to kind of create internally solutions for our clients as we see opportunities in the market. And probably, it might be closer to 7 years now, about 6 years ago, we saw a need in the marketplace for really for the larger landlords that we were helping finance. We started to hear a lot about questions about compliance when it came to security deposits, whether they were doing it correctly. We do a lot of multifamily financing, so we just started to hear that trend a little bit. Also, as we're located in the Boston market, we started to see trends where if you're close to a lot of the colleges, a lot of the times you'll get 3 or 4 people living in one apartment. There's parents that will go co-sign lease, and they each want to pay their rent check separately from different sources. And it started to become a little bit of an administrative burden for their office or property manager. So our team, with the support of our CEO, Jay Tooley, and CEO, Cecile Tooley, and President Jay Tooley, we developed a software called Z-Rent and Z-Deposit. And they essentially act as fintech solutions for collecting rents from multiple different sources, and also the escrow, which is a solution that helps with all the compliance and reporting for security deposits. And they're 2 separate platforms, and they really have added a lot of benefits and value to those markets. Really, what it is we developed the software for, let's start with Z escrow. It's where all the security deposits for these large properties come into. And it really gives a nice sub-account platform where all security deposits can be under one household, but all have different sub-accounts. It gives the tenant the ability to view where their security deposit is held. And it gives all the electronic benefits of getting the W-9 form, which is sometimes a challenge to be signed by the client. It has all that technology embedded in the software. Very, very fluid. And it also takes the compliance headache off of the property manager or the landlord, knowing that Leader Bank will facilitate all the compliance documentation, all the annual letters that have to go out, any interest checks that have to be cut to the tenants. All that's taken off the landlord, put onto our platform, and we handle all of it at no cost, as long as they're using Leader Bank as a deposit account. So it's a great upsell, cross-sell for us. Z-Rent, a similar type platform where it's electronic, where landlord has a 4-bedroom apartment. They can set up through their Z-Rent platform and email all the 4 tenants or the parents, however, if there's co-signers involved. They can each put in individually their information, their banking information. It's secure. And every month, whether it be through their portal or automatically, rent is paid, captured and reported, and deposited into the landlord's account. And the landlord has a full record of who pays what, a reconciliation every month. It's all automated, and it's been just a great feature. It became very common in Boston to have these multiple rent checks. And for large landlords, it's chasing down the checks. I only got 3 out of the 4. Where's the 4th one? This takes all that pain off the table. So it's been a great solution. And the nice thing about it is that it got to be so popular that we spun it out of Leader Bank into its own company and have taken that nationwide. And a lot of banks across the country, a lot in Boston as well, have now become clients of that software and are using it as a cross-selling tool to their client base to get deposits and obviously cross-sell their own commercial customers. So
I want to ask, was that something you guys had in mind when you started building? Because I think as a company, as a guy who spent a lot of time in companies doing software development, like architecting for the things you might build for just me, like I would hack some things together, tie some things with baling wire, internally. And when you're building something for use by third parties, there's usually like quite a bit more a different architecture you might take, different decisions you might make. And so I'm curious if that was something that was in scope or contemplated when you started building that, or if that was just like, hey, this seems really useful and other people could use it. I just am curious how that came about.
I think initially it was sort of a solution that we were going to try to offer our own client base. And as we started to promote it more and more, I think it started to get a little bit more noticeability in the marketplaces from other banks or other competing institutions, decided to take its own life, if you will. And I think that's when the bank made the decision to spin it out and have it be its own separate company and really try to cross-sell and make it its own. So it sort of took its own life and unfolded. I think initially it was just going to be a vertical that we could offer our client base to make them, add more value to it, solve a problem, and capture deposits, and obviously, just another cross-sell of a service. But yeah, it was a huge demand nationwide. I mean, that's what it really was. It was the Z escrow really took it up to the next level because there's so much escrow services out there. It's just not a typical escrow account for a straight deposit. There's 1031 escrow. There's municipalities that have escrow accounts for various funding. There's attorneys that have various, for states and various other functions. So many different verticals under the escrow umbrella that we could cater to. And the escrow was a great platform to leverage. So very user-friendly. And so I encourage anyone to reach out to the bank to learn more about it for their own benefit or institution.
Yeah. So second question, similar lines, but how do you think about the build by partner discussion? Here's a case where you built, which is, unique and, but you also have done partnerships with fintechs. I know you've been an nCino customer for many years. And obviously I've always kind of laughed that the fintech bank partnership is a new thing. I'm like, well, the core systems have been around for quite a while. And most of them are essentially fintech companies that have been, purchase software. How do you think about that? When do we do something like build a Z escrow or a Z rent that's like unique in the market? When do we partner with someone like an nCino or another player in the fintech space that has capabilities we need? When do we just go buy something off the shelf? How do you kind of think through that question?
Yeah, I mean, I guess when we started to evaluate the commercial side of the bank and the workflow, we did discuss developing an internal software or an internal workflow that could be automated to help with the commercial loan process. At the same time, you start kind of weighing out and start seeing what's in the marketplace to see if there is a solution out there that the cost benefit, the time that we would have to invest and do it. And in sort of doing that research, just to kind of get ideas, we came across the nCino, and we were one of the early users, I feel, with nCino. nCino's been around for 10 years, and I think we joined them 6+ years ago. So they were only, 3 to 4 years old when we signed on to them. And the luxury that I think nCino had was that it was developed and built with commercial lenders helping design it, that really understood how a commercial transaction with multiple layers, complexities, guarantors, sponsorships, multiple pieces of collateral work. And they understood that workflow. And we just were very impressed with how it operated. And that was the fastest solution. We were growing very fast in the commercial side of the bank at that given time. And it was like a perfect solution that we could onboard and sort of solve the pain we were going through as we were growing that side of the bank quickly, and signed on. And again, after about a year of work, really getting the system onboarded. And again, it can be a painful process, just like any change in habit. But once the investment, after about a year was made, we really started to see the fruits of our labor and the efficiency of the workflow. And this was all pre-pandemic. And I think during the pandemic, it was the best solution to solve the needs we had at the time. And it's been a long-term investment, but we've been very happy with the Fintech partnership, the enhancements, as the evolution of commercial lending constantly changes and the landscape of banking changes and different parameters such as analytical reporting, pricing model, data. That's all the stuff that commercial lenders, we do it every day. And Encino keeps on enhancing their program to serve those needs. So it's been a great partnership.
Let me ask you, you made the comment like it took a while, but then you saw the fruits of your labor, I think was the phrase, with efficiency of the workflow. One of the things I've seen from a number of partnerships is the kind of like, I don't want to say poor execution because that's kind of a mean way to say it, but that sometimes the results don't actually live up to the expectations. And there's a kind of like, there's the defining the right partner, and then there's actually getting this thing deployed in your workflow, people trained, and taking advantage of it effectively. And I feel like many projects fall down on the second part. They may find a great partner, but they don't actually get the most out of it in the end. And I'm curious if you have advice on like what you think is useful in making a project successful and actually reaping the rewards of what you see versus finding a partnership and then it kind of like sits on the side or doesn't get used or doesn't actually result in the kind of benefits you're looking for.
Yeah, that's a good question. And we're always in the mindset of if junk goes in, junk's going to come out of it. So if you're not fully utilizing it correctly, efficiently, accurately, you're not going to get the benefits out of it. So, for example, one of our goals were to have all of our financial due diligence documents, all of our annual financial documents that we collect from customers, all of our legal documents that we collect, any covenant testing. We wanted all that to be housed on the system. So my goal was that when we get audited, like every bank does, that someone can just go on there and all that data will be in there, indexed correctly, labeled correctly, in the correct spot. And believe it or not, that is the half the battle, was getting things in the system, titled correctly, consistently, that it was a nice organized library, if you will, that someone could easily go into. And that is just a labor investment in making sure. We had a team of folks, and we still have that team ongoing because it's just obviously an ongoing platform we use. That is, their function is to download, upload, title, index these documents, if we get documents in every day on deals. And that's their primary function. That's one of their primary functions, is to make sure that's being done consistently. So when we get audited, the worst thing that I can hear from an auditor is we can't find it in the system. It would drive me crazy. And it took a couple years for everything to like cycle through as you get data in. But now that we're past that point and over the hump, we've had stellar remote reviews from independent auditors, internal auditors, and really have liked the system, very user-friendly. Everything's now organized, consistent. We have a quality control check to make sure that everything that should be there is there. So those are some of I guess the functionality or the responsibilities that we need to have someone focused on. But because without that, lenders or certain credit analysts may put things in different spots. They may title something a little bit differently. So that was a little bit of the process we had to put in place.
It's such a key point because I think so often when we deploy a technology, there's like not enough forethought or ongoing iteration on how do we use it? What's a naming? I mean, something as simple as like a naming convention or a foldering convention, or how are we going to use this tool for our workflow so we're all doing it the same way? Because what you end up with so often is like every small team does it a little bit differently, and then you're trying to find a document.
Well, that's what we're trying to avoid. And I can remember sitting in our conference rooms where we all used to come in with our big folders of deals, right? Tax returns or any deal sheets and all that stuff. And we were trying to get away from that. And we wanted everything to be put into Encino. And I can remember the first few meetings with the CEO and our press. And it's really easy to say, let me just pull up the tax return and here, we can look at it right here. But I remember saying we stopped it one day and we said, we're going to force ourselves to use it within Encino and find it within Encino. And it was painful. Don't get me wrong. I was a lender, so I said, let me just show, I just want to show you. But we actually took the time and went through some iterations and some pain points. Now it's very fluid. Everyone knows internally how it works, where it is, and it's just made it a better program, a better experience. So now we have a lot of folks in different departments too onboarded onto Encino. So we've integrated it with a lot of different departments for efficiencies, communication, notification, right down to accounting, to deposit ops. So it's we rely on it very heavily now.
Very cool. Well, I got two more areas I wanted to dive into. The next one I kind of wanted to hit was how you guys responded during the pandemic to the PPP opportunities. I remember talking to a lot of lenders that either availability of capital through the program, or more importantly, the like rapid changing nature of the way it was going to work, what became a challenge of just being able to actually execute. They might have demand or desire, but the ability to actually put a system in place and take advantage of that and serve the community was challenging. And I know you guys were a pretty big player in PPP. So talk to me about how you manage that. 'Cause I think it's a pretty interesting story how you guys actually were able to fulfill those needs of the consumers, not consumers of the company.
It was no, it's a good topic, and hats off to our senior management with the support of the board. Really gave us full support to do what we needed to do from a technology standpoint to take advantage of the program as best we could for our clients, and then open up the door to non-bank clients to take advantage of and help them. So really what we did is we knew we were going to have a high volume. A lot of banks did. We were one of the early ones that we were lucky enough with our IT support and our software engineers that are on staff that we were able to develop a workflow for PPP customers and develop a website in-house. Within, if anyone knows anything about PPP, the information was being rolled out late hours, days before it was going live. So we had the ability to really pivot and have to make decisions quickly. And we were able to develop a whole workflow for PPP eligibility, question and answer, applications. Everything was done online, of course. And then eventually, as we got that off the ground and launched, we took it to the next level and we created technology to help us with the guarantee securing process, which really was the name of the game back then. As you were under the time clock, there was only so much money, and we needed to have an efficient way to make sure that we were getting guarantees secured. And we helped, with the help of our IT department, develop a technology along, and the SBA was great in giving us the support that we needed to help us do that, and develop a software that we were able to get through a lot more guarantees than we ever would have without that technology. And without those guarantees, there was no loans to do. So, and that was just the face reality of it. And so we were one of the first lenders. We did to give a PPP check out in Boston. If you Google us, there's a picture of myself and the CEO giving out the first check. So it was, really, we were starting to make an impact right away, and we knew that we could turn things around quickly. We had pulled in resources from all over the bank and all over the country, actually, because we have folks working in different areas, training on underwriting, training on securing guarantees, customer service. So it was a whole bank effort. The technology was key for workflow efficiencies, and then also when it came down to the forgiveness process, which was the other side of it, was we had to develop a whole workflow for PPP forgiveness, which we had done. And again, this was all during a pandemic time. So again, everything had to be automated, DocuSign, e-signing, documents, and we did it all very quickly. And as the program changed, because we had everything in house, we could pivot very quickly on strategy. We were one of the few banks in Boston that opened up our doors to non-leader bank clients, and we were doing deals across the country. For I did a $750 PPP loan. I mean, up to the largest dollar amount. So we didn't say no to anyone, even if they didn't have a client. We thought it was our time and our mission to help anyone and everyone that we could, and hopefully gain a client out of it. But at the same time, it's what we did. The nice thing about Leader Bank was we became very popular towards the end of the program. Folks maybe don't know what MDI. We're considered a minority deposit institution, And SBA at the end of the program had carved out X amount of millions of dollars for NDI related banks that could continue lending PPP dollars when everyone else couldn't. So as the program started to expire for other banks, Leader Bank was one out of two players in Boston that had access, and we're still keeping the program open. And so we got popular very, very quickly at the very end because everyone knew that Leader Bank had access to securing guarantees still. And we could have shut down the program. We could have said, look, you know what? We've done thousands and thousands and thousands. We didn't. We stayed open right to the very end. You get a team that's exhausted, working 24 hours a day, different 7 days a week. Everyone had their fatigue, but no, we plowed through and it ended up being a really successful program. And we picked up a lot of nice relationships out of it, which is an added bonus, and some loyal following from it. So.
I wanted to ask, it's interesting to me that, you have two examples here where you kind of built something internally. And I think a great example of like focusing those resources on places where the solution and market isn't. So many people focusing on, we got to build our own X or Y or Z. Not really. You have limited resource. Focus it on where you can really differentiation with the services done there aren't what you need. But you also seem to have developed a speed to execute. Or PPP is maybe a hyper example of that. But even around, I think, the Z-escrow in the Z-Rent, and that's interesting because I think many institutions struggle to like committees and oversight, and it's like they may have the idea of, hey, we could do this better if we built some software to optimize the PPP, but it would be, I worked at large software companies too, and they go, oh, well, we'll have that out in 18 months, and then it'll really be 24. And you go, I don't have 24. I've got like weeks.
Yeah, I got to say, we have a lot of different examples for a lot of different, could be products that we developed or other partnerships that we maybe had partnered with other companies on, how quickly we can execute our part.
So how do you do it?
To be ready.
What's the secret?
I think local decision-making has been key to us. And that's across the spectrum on, from approving a deal to, approving a contract for a vendor or a fintech that we're trying to onboard. But having access to key decision makers, technology has helped with that with respect to, if it's Friday afternoon and I need to hop on a quick Zoom call with our CEO and president to approve something, they're willing and able to. And I think that's half the battle, is making sure that someone's willing to be accessible, even if it's odd times. We do have a great support team that has, I always say there's a work-life balance, but we have folks that are just very goal-oriented driven. We have a team actually that works in India for us as well. That's related to the bank. That helps us with a little bit of additional ammunition for back office support for certain tasks that we're doing. So, and again, I'll say even during the PPP program, we had so much volume that we had folks in India operation helping support and underwrite PPP loans on the back end. So as we were sleeping, I would wake up and check my phone and I would see how many loans got processed overnight. So it really made us a 24-hour shop, and it still does. So we've leveraged that operation where we can. But at the end of the day, it's local decision making has really, and key access to those key decision makers has made us very effective. And I think that separates us not only in partnering with fintechs or other decisions, but like even on deal making with like loans, and I need an answer. It's a big loan. It's Friday afternoon. I need an answer at 4 o'clock. Very fluid. And I think that's where the larger institutions, maybe just with different layers or different complexity in their structures, they can't move it fast. It's just not their built.
I want to ask one more question on this, which I think the idea of local decision making to me makes a lot of sense. You push the decision making down to often that person has the most information to make the decision. But I feel like culturally in institutions, it can be hard to get people to accept that, because often there's like more risks for having taken it's riskier for you to make the decision than it is to defer up the chain. And I feel like if you really want to change institutional behavior, you got to make it less risky. And I'm curious how you do that. How do you get people at lower levels in the org or in distributed places to actually say, hey, it feels safe here to make a decision to push forward a little bit, to call the CEO if that's what it takes, or to say yes on this application if that's what it takes. When, I think in many, particularly financial institutions, there's a hesitancy to embrace, even if leadership goes, we want local decision making. Often the structures in the institution end up saying, well, but if you screw up the decisions, you're going to get in a lot of trouble. So it's safer for you not to do that.
I think over the last couple of years, we focused on that more because Leader Bank, even during the pandemic, we hired, I think the number was, even during the pandemic, the middle of it, we had about 140 people that we hired during the pandemic. So it became, Leader Bank was really growing from our employee base. And what we collectively did as senior management was, it was communication was key. And especially during the pandemic when we were in the office. And we started meeting very frequently, if not once, twice a week, all senior managers. So we all knew what each other were doing. And from our executive management, they were able to clearly share with us what the expectations or the goals were or the intent was and give some direction. And I think that allowed all of us to know how to execute and know what had to be escalated or what we could execute at our department. That's something that we still continue to do. We do now a weekly senior management meeting where CEO, president, all departments share on what's happening in their own individual groups, and it gives opportunity for executive management to share any of their updated goals, revisit goals, and I think that's really helped because without that knowledge of where senior management and executive management want to go, and it's really hard for us on a day-to-day to manage our own division. So knowing some of that data and knowing it so consistently every week, it allows us to run much more efficiently. So if we were meeting quarterly, like you do a quarterly managers meeting, you'd have to be checking all the time because things change, and especially over the last week in banking, a lot of things changed, and a lot of questions would be getting asked. But with us, we were meeting so frequently that we were all fingers were right on the pulse with what the bank expectation, what the goals were, and where we needed to be on certain deals or certain contracts or whatnot. So I chalk it up to communication, and that's something that we've really invested in, not only amongst the senior management level, but just employee base, is trying to make sure that the whole company knows where the bank is going and what the goals are, because that's the only way to really move the ship. And as we've gotten so diverse and so many people now outside the state, that's even more important to make sure that the culture is there, make sure folks know what Leader Bank is doing, what's happening, from the financial healthiness of the bank to what the goals of the bank are. And I think that's really been something that we're trying just to drill home more and more. And we're starting to see the benefits of that we're starting to see all the verticals going in the same direction. And it's been working. So we're going to continue doubling down on that.
Excellent. Well, Matt, there's 3 questions I ask everybody at the end of this podcast, and I think we're about the time for that. So you ready for them?
Sure.
Here we go. Number 1, what's the best piece of career advice you've ever gotten?
I would say the best career advice that I've ever gotten was to, whatever I was doing, master it, be excellent at it. So if that was, for example, if my job was to file documents, be the best file document person there was. Neat, clean, organized, efficient. That was one thing, and that was early on, even before I got into banking. That was be the best you can at whatever role it is. I would say the second piece of advice that someone gave me one time was just focus on the now. A lot of times I see in different careers is that people are so quickly worried to get to the next step. And it's so focused on the next step, they're not focusing on the current step that they're in. And believe it or not, the current step that they're in is so important to the fundamentals and the foundation of their career that sometimes they don't even know it. Like the stuff they're going to learn in that first job, whether it be like a credit analyst 1 or 2 or whatever role you're in, that information you can carry throughout your whole career. But if you don't have that locked down, you're going to have cracks in your foundation the rest of your career because you didn't really truly have that foundation secured. And that's in finance, but that's so that's something that and I share that a lot with our team now is to master what you're doing, learn it. Don't worry about what the next step is right away. You'll get there; it will come. But just try to, that's the newer generation sometimes. So that's something I give advice to all new credit analysts or new folks coming in.
Yeah, echoing Abraham Lincoln, whatever you're going to be a good one, but kind of focus on the now and be good at whatever it is you're being asked to do. I think it is a simple, but sometimes the best advice is simple, but yet not easy. Second question I've got: what's the best piece of advice you've gotten or given about the consumer banking space in general?
To diversify, diversify, and the timing of diversification is key over the last couple of weeks. What's happened in the consumer banking world and whatnot in retail banking, but diversification I think is key. And all the clients that we have, we always talk about diversification. And it doesn't mean diversification, meaning you can't still be in the same sector. Like, for example, if you're a real estate investor, doesn't mean you can't have more than one building. It's sometimes spreading the risk out among different types of buildings or different types of industries. So don't have all office. Maybe have some multifamily, have some office, have some mixed use. That level of diversification. And then obviously on liquidity, you always want to have good diversification. So diversification is key. It's balanced. And it's really been the name of the game, especially and come to the surface in the last couple of weeks. But diversification is always prudent. And even in our side of the world in lending, banking, retail, it's still diversification. We don't want to have, when it comes to borrowing client, we want to have a lot of borrowing clients, not just one big one. We want to have a lot of deposit customers, not one big one. So,
diversification. All right. And then last question, what's one bold prediction for the future?
Ooh.
Wide open. I know.
I'll answer two ways. One is on the prediction on the real estate side. I think, we like to stick to what we know. So we're sticking to the markets that we know well. And with that, it gives us the able to predict that our assets are going to be safe, meaning that we're lending in markets that we've lent in for years. We know them. We have feet on the ground in those spaces. And that gives us comfort that we know our portfolio and our lending practices will be safe and sound. I think on the flip side of lending is like on the employee side is that the hybrid workflow or the hybrid employee base is the future. I like to think that the old days of corporate America, where everyone's in the office and it's like 5 days a week and full days, are going to come back. I don't think they ever will. And I actually feel bad for a lot of the people that are now entering the corporate world that are never going to truly experience that. But I think that it's just the way of the world. And I think that we have to embrace that. And we've done a good job of embracing it. But I think we just have to continue to embrace it, but also keep in mind trying to make sure that the connectivity of employees and the culture of the bank stay intact. So that's kind of, I think, going to be the new challenge in the future is how to make sure that the culture across the country, our employees stay connected, and whatnot there.